Hello and welcome to the Weekend Investing Daily Bite of 23rd of July. And today was important because we had the Union budget today. Uh, as from yesterday's video, at least I had expectations of some sort of a regressive additional taxes coming on, and my worst fears came true today. So, taxation on almost every front has been restructured, rejigged, increased. Um, Although in a year where we were boasting about very high direct tax collection, very high indirect tax collection, very high RBI dividends to the government, there wasn't much need for uh, so much of tinkering and increasing taxes, especially in the realm of capital gains. But whatever the government chooses, it can do, and we have to basically abide by it. So that's where we are. I think most people that I talk to, or even on Twitter, seem to be not so happy. Yet the markets didn't fall. I mean, the beauty of the Nifty right now is that come what may, the index doesn't fall, and that is telling you that you know the market will brush this aside going forward. That's the message that the market is giving today. That doesn't matter. Let's go forward, right? Because this kind of when we discuss it in the second half, I would call it almost tax terrorism, where you first, like for instance, in the case of STT, you first introduce STT saying that I'm introducing STT instead of long term capital gain. So long term capital gain is off, but STT will be there. That STT will be set offable against your other tax uh, commitments. So, if you paid say 1 lakh SGT in a year and you had to pay a total of 2 lakhs of income tax, and 1 lakh is set off from there. That is where we started STT from. I don't know how many of you will remember it or how many of you experienced it. This was, I think, 2004-5. Then the next step came that STT will remain where it is. We will not give you the set off. Okay. Then the next step came, STT will remain, but we will increase it. Okay. That also people have accepted. Then the next step came, the increased STT will remain, and we will have long-term capital gain also. Okay, that also people have digested. Now the next step has been that we will, increase the long-term capital gains also, and we will increase STT also now more. That is now getting into the territory of, not listening at all to at least the market participants. Um, just by giving some small doles to middle class, uh, some 16, 17,000 rupees will be additionally available for disposable income is not a really big deal. And the exemptions in the budget remain where they were. So overall, it's not a very enthusiastic budget announcement for the capital markets. But overall, for India's growth perspective, allocation to defense, allocation to railways, allocation to jobs and education, I think there, at least on paper, it looks good. So, from a very personal point of view, how will it impact each of us is maybe not so good. But when we see that overall, if the country is growing, we will grow along with it. Then you can say, maybe not so bad either. So that's where we are, but I'll discuss more about this towards the end of the video. Please subscribe to the channel if you've not so far, and let's go forward. So where's the market headed? The market made a very nice looking, I would say, long-legged candle today. Um, at one point, when it breached this previous support, it did seem like that it will give up and stay down, but it recovered very dramatically. And nobody could have imagined, even with the set of taxations, increase in taxation, that this kind of end of the day would happen, where Nifty has fully recovered from the bottom. If you recall the election day, there was recovery, but only to some extent. And here today you are saying that almost full recovery is happening, and we've closed just near yesterday's close. No harm done, actually speaking, on the Nifty as such. Nifty Junior cracked very hard, went from nearly 72,000 to 69,000, but again recovered very, very smartly to close above this moving average here at minus 0.8%. Some damage there for sure. Mid caps also recovering very hard, almost 700 points from the bottom at minus 0.44% down, still very much within yesterday's close. And small caps also doing the same. In fact, small caps had reached 16,500, virtually where we were a few days after election, and recovered back again. So this is minus 0.6% on that. This is actually speaking, if you set aside the damage to your own, bottom line because of taxation, you set that aside. This is a fantastic move in the market, signaling strength, signaling buying at every level, signaling that there is enough liquidity in the system to withstand some of these shocks. And that's what happened today. Bank Nifty, however, slipped a bit, down 0.96%, closing at 51,778. But still, I would say below. If it remains above 51,165, I would remain hopeful that it will turn around sooner or later. So, looking at today's heat maps, you can see that you know banking was down, Reliance down, L&T down, Power Grid, Asian Paints, ONGC, Coal India, Axis Bank, a lot of index heavyweights down. But on the other side, you had Infosys, TCS, HCL Tech moving up. You had ITC move up 5.5%. You had Titan move up 6.5% on reduced gold duties. NTPC up 2.4%. Adani Ports, Tata Consumers, Hindustan Levers, all of those were up. So it was a very well balanced Nifty trade. Whether it was managed this way or it automatically happens this way, I have no idea. But it is surprising to see that people who, in general, were disappointed with especially the taxation part of the budget, um, the markets have stayed resilient also. Nifty Next 50 was more red. So you can see this entire left side, LIC, IRFC, all the rail stocks were badly damaged. I think rail stocks will make some sort of a comeback tomorrow because they have allocated some 2.3 odd lakh crores to railways, much higher budgeting for railways. I'm not sure what was the expectation, but rail stocks had run up a lot before the budget for hoping for more allocation, and I think that has come through. Uh, Stocks like HAL, BEL, PFC, REC definitely down and maybe can go down further. There was no talk about disinvestment or those targets, or maybe I missed the same. So that is something that we need to watch out for. Torrent Pharma, Godrej CP, Dabur, United Spirits, these were some of the stocks that really held up for Nifty Next 50. Sectoral trends today, you had FMCG on the back of ITC and levers move up 2.7%. Consumption stocks, so Titan, Asian Paints, all these stocks moving up at 1.1%. You had IT move up 0.7%, pharma move up 0.6%. So very, very defensive top four sectors. So essentially, market said that liquidity is going towards defensives, and let's see how the other uh, parts of the market will recover, or whether they will see a deeper dive. Real estate minus 2.3%, I think, is more of a knee-jerk reaction. On real estate, the indexation on long-term capital gains has been taken off, but my calculation is showing that for most real estate calculations, even people who have bought 10 years, 20 years, 30 years back, 12.5% long-term capital gains versus 20% with indexation is still not so bad. I think this knee-jerk reaction is there. Of course, this may hit some cash component real estate investing. Uh, I think this change of removing indexation and reducing tax is a way in which government is trying to induce people to do all check transactions. So if in all, I would say, uh, versus other countries maybe, or let's not compare with other countries, because that argument comes around that what are we getting for our tax. So even otherwise, 12.5% long term tax on some asset class is not bad. I mean, if you make some good gains, and you're giving 12.5% of that as tax, I don't think it is such a bad deal. Especially when you're giving, up to 40% of your personal income as taxation, or 25% of your corporate income as taxation, or 30% with other slabs. 12.5% in a asset class which generates, maybe 10 to 12% CAGR is not so bad. Public sector banks down 1.4%, public sector enterprise stocks down 1.4%. Lot of yo-yos during the day. I think the recovery in most of these was of many percentage points. For instance, I think during the speech, many of these stocks or sectors had reached -3%, -4% also. So very good recovery from that point. FMCG, of course, is just going bonkers since election day. From 53,000, we've gone to 63,000. So almost a 20% jump has come around in just uh, uh, 7 weeks from the election bottom. It's a fantastic performance from FMCG stocks, up 2.6% today. In terms of stocks, you had ITC move up 5.5%. So ITC is now making a move towards newer highs. It has closed at a new high at 492. If this sustains, I think this can go very very high. This was a good consolidation for 1 year, and if this trend has continuation here, it really can have targets much higher. Now let's come back to the budget. Tax terrorism is back. Key points from the budget. LTCG limit increased from 1 lakh to 1.25 lakhs. So exemption of LTCG, which was 1 lakh, is now 1.25 lakhs. It can help some people, but more or less people who are in the markets, this amount is not so meaningful for them. LTCG increased from 10% to 12.5%. So long-term capital gains on equity, on in fact on all asset classes, is now 12.5%. Short-term capital gain is 15 to 20%, has gone from 15% to 20%. So these are big jumps. They look small in terms of numbers, but the capital gain is up 25% for long term. It is up 33.3% for STCG, and for options, it is almost up about 60%. Options STT is up from 0.06 to 1.1. Futures STT up 0.01 to 5.02. I think if they really wanted to curb people from coming into options and futures, they should have increased some, income levels or net worth criteria to have access to that market. Just by increasing, options STT by 60%. So if somebody was paying, 6 rupees, they will now pay 10 rupees as STT. That will not deter people from, it's just like saying on the cigarette pack, we are showing a human skull, and we're saying this is very dangerous. It has not stopped anybody from smoking, right? So these are these measures are shown to be for the benefit of the user, but actually is increasing the coffers of the government only. So this I didn't particularly like this tinkering of this STT part. Uh, the good thing about this, if I were to look at some good things out of this, is that they've tried to simplify the tax regime. Holding periods, which earlier used to be 12 months, 24 months, and 36 months for some asset classes, have now been clubbed back to two only. So you only have 12 months and 24 months. 12 months is for all listed securities and bonds. 24 months is for gold, venture bonds, unlisted securities, and real. So this has, this clarifies a lot of things. And what they've done is, while real estate long term used to be 20%, it has been brought down to 12.5%, but the indexation has been taken away. So if you had, let's say, you bought a property, let's say 2020, 2004, for let's say 100 rupees, and today it is 10,000 rupees. So you could have indexed that initial 100 by about 4 times based on the index calculation, and then calculated your capital gains. But now only the difference, whatever is the difference, will be 12.5% of that will be payable. So we've done some basic calculations on some real data, and it is showing for, let's say, for Gurgaon property bought 20 years back, it is not making any uh, detrimental tax if you do it at 12.5%. But of course, it assumes that you are doing only check payments, which a lot of poor people don't do. So from that point of view, for people who do check completely white and sort of no nonsense kind of transactions. For them, I think this makes no difference at all. Other than that, I think what majorly changed was this is also a similar sort of a chart where what used to be um, a 10% tax on listed is now 12.5. On unlisted, it used to be 20%, which is now 12.5. So this is, I think, a big benefit for startups, etc. Listed debentures bonds used to be 10%, is now 12.5. Unlisted debenture bonds 20% is now at slab rate. Uh, Units of equity oriented mutual funds listed 10 to 12.5. Units of equity oriented mutual funds, of course, 20%. Uh, Unlisted ones, 20% of indexation is now 12%. REITs in REITs are now 12.5, but they used to be at 36 months. They should be, I think this should be 12. This is sourced from Altus, so I think this should be 24 months, but I'm not so sure. Immovable properties, of course, are earlier also used to be 24 months. This also is 24 months for long term, but earlier it was 20% with indexation. Now it is 12.5. What major change happened was on precious metals, where the duties have been reduced from 5% to 6%, the base custom duty plus the cess. That this import duty on gold has been going up for the last decade from 2% till 15% in the last couple of years, and today it has come down to 6%. So people who have bought gold since 2000, about 13 in the last decade are feeling a bit low because of this, because they paid this duty while buying, but now when they will sell, the rates have already gone up. So gold prices crashed from about 74,000 to about 68,000. Basis this in the long term, it is very very good for gold. More people will be able to buy gold, and this should spur the demand for gold. But those who are holding gold, this is definitely a dent, a 9% dent in their net worth as of today since versus yesterday. So, although gold has gone up quite dramatically in the last 2 years, nobody likes a 9% cut, and hence this is something that could have been done maybe gradually over 3, 4, 5 years, but the government of the day chose to do a 9% cut, and maybe in the next budget they may bring it to zero. That is also possible. I think this kind of cut is signaling something. It is probably signaling that we've sold all these SGBs all these years, and now when the time is coming to pay them, we'll pay you 9% less. Uh, so that from that point, and there is a redemption coming just in the next week. A lot of folks are going to get that redemption at the average of this week, which is going to be about 9% lower. Not does not leave a good taste in the mouth. The other thing that may happen is that all the listed SGBs that are there may now start to have premium on them. Already some have premium, but I think with no new SGBs coming into the market for some time, maybe there has been a rethink on this entire instrument, and there may not be new SGBs that may come. So whatever is existing in inventory, people will create a premium on that, and those may be at a premium. So if you're holding SGBs, I think hold them and don't sell it off easily. But the new ones probably are not coming easily. So there is a change of, I think, and we'll come to know in a couple of the press conferences that the FM may do, that is the government trying to send out this message just like China does or just like Russia does to their citizens that please go ahead and buy gold. So far, government was saying don't buy gold. It is causing USD to go out of the country, so on and so forth. So is this a change of tactic that we don't want to stop our citizens now from buying gold? Let them buy gold. It will help us in reducing our dependence on USD. Maybe that is the underlying theme, but we will come to know once we hear more commentary. This is all I have for this daily bite. Thank you so much for watching this. Please do like and share this video with your friends and family. And do send your comments on today's budget. It will be great to go through them. Thanks. Bye.